All right, drivers, let's talk about what's happening out there on the road right now. This is your mid-July freight market update, and I've got some news that might actually put a smile on your face for once. First things first, the post-holiday rebound is real, folks. After that July 4th dead zone we all know and hate, freight's picking back up. Load posts jumped 33% week over week. That's not just noise, that's actual freight moving. Here's the kicker. Capacity dropped 16% at the same time. What's that mean? Higher load-to-truck ratios. More loads chasing fewer trucks. That's the sweet spot we've been waiting for. Spot rates? They're holding steady from June. Roughly flat year over year. Not great, not terrible. But here's what matters. Tender rejections hit 5.1%. That's back to 2019 levels, which means the market's finally tightening up like a new fan belt. Let's break down the bread and butter. Dry van. Load posts up 34% week over week. Load to truck ratio sitting at 7.7. That's up 22% from last week and 23% year over year. Spot rates at $2.07 per mile. Flat from last month, up 0.5% from last year. Yeah, I know, not exactly retirement money, but it's movement in the right direction. Tender rejections at 5.3%. Still plenty of capacity out there, but it's getting tighter. Midwest and Southeast are the hot zones right now. Northeast, still softer than truck stop coffee. Reefer drivers, listen up. Load posts up 13% week over week. Load to truck ratio at 14.8. That's up 13% from last week, and a whopping 47% year over year. Spot rates at $2.44 per mile. Down slightly from last week, but up 7 cents from June. That's diesel money right there. Here's the big news. Reefer tender rejections hit 8.4%. That's double what we saw in early May. Capacity's getting tight in the cold chain. Produce season's cooling down, but you've still got tight pockets in the west and south. If you're running reefer, those are your hunting grounds. Flatbed haulers, you're looking at the best numbers on the board. Load posts up 47% week over week. Load to truck ratio at 28.0, up 23% from last week and 69% year over year. That's serious demand. Spot rates holding steady at $2.58 per mile, up 10 cents from last year. Not bad for pulling steel and lumber. Tender rejections at 6.5%, down from the holiday peak. Sunbelt construction and energy work driving demand. If you can pull it, they need it moved. Florida drivers, here's your local intel. Outbound van and reefer rates are trailing national averages. Produce season's winding down, so there's plenty of capacity sitting around. Flatbed demand from construction is solid. But heads up, hurricane season's coming, and that could shake things up quick. Expect Q3 volatility when those storms roll through. Texas crew, Dallas volumes up 5.6% past 2 weeks. Strong industrial pull there. Houston took a hit from Storm Barrel. Rejections jumped 115 basis points during that mess. South Texas produce is supporting reefer rates. Flatbed averaging $2.72 per mile. That's the highest rate on the board. Capacity's balanced but tighter than 2024. Here's what the pencil pushers are saying, and for once, it's not all doom and gloom. Large fleets are down 11% year over year. Companies like Werner are pulling trucks off the road. That's capacity leaving the market. The freight recession looks like it bottomed out. ISM PMI ticked up to 49.0. That's industrial activity starting to rebound. 2 wild cards to watch. Potential Fed rate cuts and active hurricane season. Rate cuts could boost the economy. Hurricanes? Well, they tighten capacity real quick, especially in the Southeast. 4 things to keep your eyes on. Late summer peaks. Back to school and Labor Day freight is coming. Retail and produce peaks hit late summer. Weather impacts. Above normal Atlantic hurricane forecast. That could tighten capacity in the Southeast fast. Capacity trends. Ongoing capacity attrition is supporting spot market firmness. More trucks leaving means better rates for those who stay. Regional volatility. Expect rate spikes, especially in Florida and Texas lanes. Be ready to move when opportunity knocks. Bottom line, drivers, market's tighter than 2024, stable from last month. Load to truck ratios are elevated. Tender rejections back in normal range. That's market health. Southern regions leading demand and rates. If you can get south, that's where the money is. Strategic planning time. Plan for volatility and leverage spot opportunities when they hit. This market's finally showing signs of life after a brutal couple years. Stay sharp out there. Keep your fuel costs down. And remember, we've weathered worse storms than this. The freight always moves, and we're the ones who move it. Any questions before we wrap this up?